Welcome to the Market Frontlines. I'm Lyndsay Malchuk. London was buzzing last week and capital flows are shifting again. But there is one asset class that refuses to bend to market emotion, and that's land. The quiet heavyweight in every serious portfolio. It doesn't chase momentum. It doesn't care about sentiment. It builds value while everything else argues with itself. And to take us straight into the substance, I am joined by Jay Henderson, partner and head of real estate for Desmos. Well, hello, Jay. Welcome to the Market Frontlines. I'm actually excited to open up this conversation around land and portfolios with you.
Yeah, no, fantastic. Great to be here.
I'm going to jump in here. Most investors, they love movement. I mean, they want speed. They want exits. They want the illusion of control, we'll say. So land offers none of that. It really forces patience and long thinking. So tell us this, why should a serious investor still carve out space for an asset that refuses to behave like the rest of the market? Because the minute the noise gets loud, the real assets quietly take the lead here.
Yeah, absolutely. Well, I think for the exact reason that you've mentioned there, it doesn't behave like the rest of the market. I mean, you've got two aspects of land. You've got a capital value of land, and you've got an income value of land. The capital value of land, there is no more land. You won't be making any more land. So it's got a finite value regardless of the income value. And then you have an income value, which can be extremely malleable and you can adapt that to your use of land. So it's a fixed asset. You can look at it as a store of gold or something, but it's also an income producing asset.
Okay, so let's push that a little bit further then. Beyond the usual talking points about stability, what does the land actually give a portfolio that financial assets can't? I mean, what is the real resilient story here? Is it the scarcity or the long horizon, the appreciation, the insulation from market mood swings? Break it down here for us.
Yeah, it's a little bit of both. If you look at the global financial crisis in 2008, equity markets were off, bond markets were off, land markets were largely off, but then you had certain asset classes that, really sort of outperformed. You had student housing, for instance. Everybody went back to school. Student housing was kind of a nascent asset class at the time. It became a very institutional asset class, and it's one of the bigger asset classes today. During COVID, we saw offices getting hammered. We saw hotels getting hammered. We saw a lot of sectors getting hammered, but logistics blew up. Everybody was shopping online. Logistics became such a durable asset class. It became the asset class of choice.
Well, okay, so now that we understand why that matters, Jay, the next challenge is knowing what to buy. So not all land carries the same future. Some regions are entering real scarcity, and others, they're stepping into new economic cycles. So from your seat at Desmos, what categories of land stand out right now? Is it agriculture, timber, transitional, strategic corridors even, or urban edge? I mean, where's the smartest allocation for investors who want real long-run growth?
Yeah, it depends on what you're looking for. We're seeing a lot of interest right now in, people are back into hotels again. The hotels were one of the first asset classes to recover after COVID, but those were the destination hotels. Now we're seeing the city center hotels come back into play. The nice thing about a city center hotel is you've got a base rent, but then you've got a participating rent. So from an owner's standpoint, you've got downside protection, but you've also got upside benefit. We're seeing the logistics sector continue to outperform generally in markets. That sector has become quite intricate and quite diversified in itself. You've got large warehousing, you've got last mile logistics, you've got cold storage. So you can really pick and choose your asset classes within those areas. Europe, I think we've seen markets. If you look at Germany, it's been quite beat up. Investors are starting to dip their toe back into Germany right now, starting to see the bottom in that market. You're seeing interest in office in the large, the traditional hubs. So New York, Paris, London, you're starting to see investors come back into office in those spaces as working conditions sort of normalize again and people get back into the offices.
Well, that's the thing, is that more companies are saying time to come back to the office now. So I think that overhead cost that they're locked into for many years, they're like, we need to exercise that. That's for sure.
It needs to pay off, right? Yeah, absolutely. And then residential, of course. I mean, if you look at the last 5 years post-COVID, interest rates have been high. Many developers got into projects on pre-COVID pro formas, so paying a high cost for land, low interest rates, cheap debt, and their pro formas were blown away. So you don't have a lot of development actually that's been happening in residential over the last 5 years. In the US, you had some overbuilding, but that's, gradually that's being absorbed by the market. But generally, you haven't had a lot of new product come to the market. So residential is something that is always durable and continuing to, outperform. I think that's always an investment class
Absolutely.
that people are looking
Well,
at.
once you know the category, then you still have to choose the ground it sits on. Now, investors tend to stay inside the geography they already understand. However, the smartest moves, they usually happen outside that comfort zone. So which regions or countries are becoming quiet power plays for long horizon land value? And further to that, Jay, what early signals tell you a jurisdiction is worth your capital?
Yeah, well, let's start with the last question. I think, when it comes into if you're in fringe markets, if you're in emerging markets, you want to know that you have, the Singapore story. You want to know that you've got a reliable court system, that you've got a reliable land registry system, that the infrastructure is in place, that you've got the demographic growth to support your gains, to support whatever project you're building. In terms of specific markets, the U.S. Sunbelt, you're still seeing inflows into that market in terms of residential and domestic demand there. Your energy corridors, your logistics corridors, those are always going to be important markets, and you're seeing those especially in places like Europe and the developing markets. You're seeing those corridors expand into new territories. So you're seeing, we're doing work in Africa as well at Desmos, and we're seeing how East Africa, the region with the Congo, with Uganda, with Tanzania, with those areas are building incredibly fast, and just with the amount of mineral and resource there's tons of opportunity in that area. And you're seeing that those jurisdictions are becoming more focused on bringing in international capital. So I think Africa really can be the next part of an interesting story. You've got quasi mature markets like Poland, which for the yields that you're getting in Poland comparatively to the rest of Europe or North America, you're getting higher yields with relative stability. And then as you go, more into Eastern Europe, into Romania and Bulgaria, there's tons of opportunity in those markets, I think.
Wow. That's
in
global.
terms of agricultural land, the stalwarts in that area, you've got, your Canadas and your Australias, which are mineral rich, which are powerhouses in terms of agriculture. Those are always going to be interesting. And in Asia, you've got a lot of changing patterns in Asia, a lot of wealth being created in Asia, and a lot of focus on those markets, particularly say Vietnam, Indonesia, Thailand to some extent, Cambodia to some extent. There's shifts happening in Asia that are driving some of those economies. So we'd like that. Again, in Europe, you have Spain. Spain is the hottest performing economy in Europe, from being very much on its back to being the strongest economy in Europe. So you're seeing interest in logistics, interest in residential. Those markets are doing well.
I've been hearing a lot about Spain and how people are actually heading down that way. So that's an interesting fact right there. Okay, Jay, I need to bring up the side of this conversation that most people are avoiding. Now, land is immovable, and that means every rule and every regulatory matters. So what are the blind spots investors never consider until the problem lands on their desks? How do you separate real structural risk from the background noise that scares people away for no reason?
Yeah, you do have some risks with land. You've got, if you're a developer and you're looking to develop a piece of land, you've got a massive regulatory risk. You've got zoning risk, permitting risks. You've got fees and subsidies and land contributions and whatnot, which these are things that can really add to your pro forma. They can delay projects for a long time. So you really have to know the regulatory market that you're working in and be very clear up front in your understanding of that market and the consultants that you're using and the people that you're dealing with. I guess, the story for the last 5 years, 10 years is becoming climate risk. I mean, we're seeing real challenges with climate risk. We're seeing flooding, we're seeing fires, we're seeing, water scarcity. We're seeing a lot of climate risks coming to the fore now. We had the wildfires in California, and the rebuilding is not happening as fast as you would think in places like LA, simply because people can't get their homes insured. You have to come up with an entirely new building system because stick construction is not insurable in California anymore. So you've got to look at what your market is doing. I guess the other thing too is liquidity. I can sell a sock in 30 seconds, but I can't sell a piece of land in 30 seconds. Especially when you're getting into specialized types of assets, they can take a while to sell. And, you may be trying to time a market, or you may need instant liquidity. And that's not often the easiest thing with land.
Land has now completely outlasted every cycle. It's outlasted every bubble, even market drama.
Yes.
It's outlasted all of it. And investors who ignore it usually regret it. So thank you for being here and bringing clarity to this space that actually rewards patience and real strategy. I really appreciate that, and come back soon.
Yeah, great speaking with you.
Again, that was Jay Henderson, partner and head of real estate for Desmos. You can dig deeper into their expertise over on their website at desmoscp.com. It's conversations like this that remind us that markets love illusions, but wealth is built on what is real. So create screens, they flicker and the trends will fade, but land stays. It holds its value, its power, and its place in a portfolio long after the noise dies down. Always, always remember, though, these are the opinions of our own with possible vested interest in any or all of the companies we may have spoken about. Always be sure you work with a licensed financial advisor and know your own risk tolerances. For a copy of our complete disclaimer, head over to Appeton.com. I'm Lyndsay Malchuk with Appeton Media. This has been the Market Frontlines. Thank you for watching.